So near the close today, I was planning on doing another YouTube live where I'd be able to jump on there, share my thoughts on what was trending on stock twits, current trades, all that stuff, and none of it happened. And the reason why none of it happened is because life happened. So at the day job, a lot of things came up last minute and I needed to deal with them. So that gave me another idea. How do I manage a portfolio while dealing with all that and still be able to dramatically outperform the market? Remember, last year in 2017, I was able to triple the return of the S&P 500, and days like this would happen routinely. So I wanted to share with you a little bit of how I'm able to deal with all that stuff and still be able to take advantage of the market and have a solid trading plan that will allow me to take advantage of the market despite all the craziness of the regular day job. So sit tight and let's get in. For the sake of those of you that are new to me, my name is Michael Amat. I'm the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we do that is through videos like this, and everything on ChartYourTrade.com really shows my entire process of how I've gone from somebody that was new to the market to somebody that's taking advantage of the market. And I developed it to help you make that same kind of transition and to be able to have these great returns. So let's dive in. So the trade that we're going to walk through today is the semiconductors ETF. It's ticker symbol SMH. Now this is a trade that was actually started back in July of 2016, but it's included in 2017 because the trade was actually closed in January. So let's take a look at that and see what was going on at the time. Let's go over here. So we're going to go first to my account, pop open the advanced stock reports, and then we'll come over here and search for weekend report, and we'll look at 2016. And we're looking for July. All right. 17. Okay, so this is the report. This is where we actually entered, or the report where we first initiated the position. So July 11th, we had a working order for SMH with a buy stop at $58.65, protective sell stop at $55.79, and so we're risking 4.88% on this trade. So everything's laid out there for us nice and neat. The next thing that I would do after seeing this trade laid out, I would go figure out how many shares I need to buy. So I'm going over to the position size calculator on ChartYourTrade, and again, now let's just assume that we are using a $100,000 account. It doesn't matter if you have 100,000, it doesn't matter if you have 10,000 or 5,000 or 1,000 or a million. This calculator is going to work and you'll be able to use these kind of trades. And if you are using a broker that has very low transaction fees, you'll be able to take advantage of this service much easier. For example, like last year even, if you only had $5,000 and you were with a broker like Robinhood where there's no transaction fees, you would have been able to still make your money back and more with the advanced stock report service. It's $1,000 a year, and you would have made last year 60%. What is that? You would have made about about $3,000. Yeah, you would have made $3,000 on that last year. So you more than paid for the yearly service. Anyway, so 1% entry price was, what was the entry price again? The entry price was $58.65. 58.65, and the exit is 55.79. So compute that, and we were able to buy about 350 shares. We're risking $20,500, and we are risking that same 4.88%, and we are risking $1,000. So again, very important, we want to keep our risk consistent on every single trade, so that way when we do have a nice tight stop like that, we're able to take advantage even more of the trade. And when our stops are wide, and we're only taking trades where the stops are wide if we feel that it's a really big momentum stock, then they'll be wider, but we always want to risk the same amount on every single trade, so that way we are being consistent. So back to the charts. Okay, so this is what SMH was doing at the time. It was setting up in this flat base, and it was a first stage flat base. The way that we know that it was a first stage flat base is that it was the first time that it was setting up, ran up, and it did not move up 20% or more. So for those of you that are familiar with the CanSlim methodology for the teachings in this book here, you'll know what a flat base is and what the stage count is. A little out of the scope for this particular video, but definitely recommend picking this up and giving it a read if you haven't already. So, but you don't need to know that in order to take advantage of this. That's just a little bit more in depth. So we ended up entering right there on that day when it broke out, and we were able to get in at that pivot, and we were able to have our stop loss. Where did we put the stop? I forgot already. At 55.79. So right over here, right below this low over here. And then we're riding the trend up. It broke out, it did very well, and had its first pullback, and then it was kind of chopping around the 50-day moving average, and the stops are being moved up progressively. And over here, the service decided to tighten up the stop. So if we are looking at what the market was doing back in January, and it's real interesting to go back and try to understand, well, why were certain things happening? So back in January, around that time, the market was extended, due for a pullback, and it looked as though it was going to start pulling back. And so at the time, a lot of stops in the model portfolio were being rolled up. And this was a trade that we ended up being stopped out of. Okay, great. So we are stopped out over here, and the reason why is because it broke this level of support here. So former resistance should have been a potential support zone. Then you have all these different moving averages, the 5, the 10, the 21-day exponential moving average. Those are being broken, and you also already have a significant gain on on an index that's a relatively slower moving index, and there's other things in the market that are setting up too. So for that reason, Adam decided to raise the stop up, and we were stopped out. All right, so a 21.77% gain in 5 months. Not too bad at all. But then we're doing our post-analysis, and then we see what SMH ended up doing. And we see how much higher it ultimately ended up going. So we had our 21.77% gain from way back here, and if we held on to it, just that one position, we could have had a maximum 83% gain if we held through November of last year. And it's real easy to go and look back on that and say, well, what is this guy, some kind of an idiot? Well, why would he? Well, we missed all this upside. Well, what's going on? We're paying good money for this, but the purpose of managing the portfolio is not just we're not looking to just make huge gains on one trade, right? It's never just about one trade. It's about management of the portfolio and managing risk. So way back here, right? So let's go back to this. You don't know if the market's going to roll over. You don't know if we're going to have some kind of a big drawdown like this down here, right? Like, well, when it starts to crash, you don't know how low something's ultimately going to go. You just know what's in front of you right now, and that's all you can trade off of. You can't trade off of like if we all had a crystal ball, or if it was. If we happen to be Marty McFly, then maybe we would be able to say, you know what, well, let's just sit with this and hold on. But we're not. We need to trade what's in front of us. And at the time, Adam made the call to exit here, right? So we exited there, and that's it. One of the great benefits of having an advanced report service and a model portfolio where you could just follow trade for trade is that you're able to take advantage of this and have outstanding returns. So tripling the S&P 500, that's nothing to sneeze at. You're able to do that and only put in 5 minutes of effort a week, just going in, taking those orders, putting them into your broker, and walking away. It's taken me a lot more time to explain what we're doing and why, and some of the rationale of why I think that things were going on back then, or what I'm able to see given the amount of trading experience that I have. But it really allows us to see in real time how a real portfolio manager, somebody that writes for Forbes, somebody that has 20 years of market experience and manages money professionally, what they're doing and how they're doing it and why. And it gives us the opportunity to both learn and to not spend all day looking at the computer or looking at markets or any of that. So does it stink that we missed that upside? Yeah, it does, but we don't need this one trade. And we still had tremendous gains. We'll talk about it in a future video, but Alibaba made 70% or over 70% for us. Adobe we're still holding on to, and that one, it's coming up on being held for a year right now. So just really, really outstanding returns and portfolio management, and that's what it's about over the long term. It's more about managing the overall portfolio versus just one trade or two trades here or there. So that's what I got for you. I hope that was helpful. Running our very special offer where you can test out the Advanced Stock Report service, get all these benefits, the model portfolio, intra-week updates, direct access to Adam Sarham via email, and you can test it all out for 3 months for only $27. Normally this goes for $97 a month, and you get to test it out for 3 months for only $27. That's it. So use coupon code 3427 when you check out. I'll have it in big bold letters right here on the screen, and check it out. Just click the link. I'll put the link somewhere up there. 3 for 27, and put that coupon code in, and you will be able to test all this stuff out for 3 full months for only $27. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions on anything I said at all, please leave them in the comment section below, and I will personally help you. Also, if you like the video, click that little thumbs up button. That'll really help us out a lot. And also make sure that you subscribe to the channel so that way you're going to get all of our updates. Thanks again for watching, and I'll see you again in the next video. Take care. Have a great day.